So you guys trade on Vanquish and want to extract at least around $10,000 every single month legally. Now, listen, I've been trading on Vanquish for almost a month now, and I already got $5,000 in payouts, which is insane. I'm about to go over for another $5,000 in a bit. But let me tell you guys exactly how I would approach this if I was starting over. Now, first things first is starting out with the right plan. Now, a lot of you guys mess this up. First things first, if we go to options 10K, I would do the options, right? If you guys are actually serious and disciplined, this is half the price and you could pass it and get a payout the same day. We can see if we add this to cart, right? If we go to proceed to checkout, actually we'll do this code, we'll just use Lander, right? This is $50 for 10K of funding, right? So 10K for $50. Now, if we go back to this and we go to 50K, modify that, proceed to here, right? We can see that it's $125 for 50K. So we get 5x more funding for only 1.5 times more money. So the 50K is honestly a no-brainer here on the options account, right? Basic. It's fine if we don't do the advanced one. Now, it is going to be a little bit harder because we have intraday trailing, but do not just start full boarding, right? That shouldn't really impact you if you actually trade profitably. That's what people don't understand. Now, I wouldn't go 75K, 100K, 150K just yet. I'm going to use our payouts from the 50K to get 150K or 100K, depending on what we're trying to pay out here. Now, strategy. What are we going to do with this, right? Because it's all about strategy. Now, first things first, you guys should know, and if you don't know, I trade breakouts. Very nice risk to reward. I'm talking like 1 to 3 risk to reward with at least a 50% win rate. This is conservative and make it more realistic for you guys because I'm at over 80% win rate for the month of April. So we'll just say around 70%, 70, 80%, which is almost 40%. This is actually 60% more from 50 to 70. So I actually have a increased win rate from 50% to 70% is 60% difference. So I am basically nerfing myself because 50% is low for how I trade, even though we get a 1 to 3 risk to reward. And it's all about expected value. This is how we can extract the most amount of money from these prop firms by just doing simple math here. Now, what is our EV? What is even EV? EV calculates our expected value every time we click the button. Now, you're going to lose money, you're going to make money, but what is the average? On average, if we smooth out our equity curve, how much is this equity curve going to go by after a couple trades, right? Every time we click our mouse. So this is how we do it, right? We do our win rate times our average reward. So in this case, it's 3 minus our loss rate. So if you have a 70% win rate, you have a loss rate of 30%. Times that by 1, because our risk is 1. And this is what we get, right? So if we do a 50% win rate, 50% loss rate, times that by 3, 1.5, minus 0.5, we get an expected value of 1R per trade, which means after 10 trades, we're up 10R, which is absolutely nuts, right? That's on the high end. On average, profitable traders are anywhere from around 0.4 to 0.6 R EV. So every time they click the button, they'll be up 0.6 R. So after 10 trades, they're up either 4 to 6 R. On average, profitable traders. Now, we'll just keep this simple because let's just nerf ourselves even further. Let's go to 0.5 EV per trade, which is insane. That means that our risk reward goes from a 1 to 3 to a 1 to 2. And this goes from 1 and this stays 0.5, which is that 0.5 EV. So let's say we have a 1 to 2 risk to reward, nerfing ourselves over 50% there from 1 to 3 to 1 to 2. And then on top of that, taking our win rate down from 70% to 50%. I'm literally trying to show you guys that by nerfing me this much, if I'm still able to show you guys the math behind actually getting a payout because I already got a payout, then it shouldn't be hard. The only problem is you guys just can't follow your plan. So let's do the math of this real quick. And I had a quote yesterday, a little motivational quote that I put in my Discord community. just any thoughts that come to mind, right? If I'm taking a shower, like these things just come to me. You guys believe in every trade. Now, if that doesn't make sense, hear me out, right? You guys believe so much in your trades that you don't take your risk seriously enough. And this was the biggest problem to me. Now, it might not fully resonate with you, but with me, my biggest problem was always stop losses. And this is one of my biggest strengths to date because my stop loss is arguably one of the best out there in terms of risk to reward with my win rate. As you guys just saw, my expected value is absolutely insane. And if I stopped thinking with so much weight per winning trade or per trade, then I would take the risk more seriously. Because even though we know that there's no such thing as a 100% win rate, a lot of you guys, including myself, used to act like it was, right? I used to think I would have a 100% win rate, not thinking that I would have a 100% win rate, but how I acted. I wouldn't sell at my stop loss. I would sell way too late. I would actually hold the trade until zero, right? I would sell it at $1 thinking it's doing something at the end of the day because it's zero DTE, so it just dies. And that absolutely wiped my account twice. So if I stop putting so much weight and thinking that these trades are actually going to work out, I would really focus on the risk. And this is all about changing your perspective here. And I know this is about prop firms here, but if we can change how we view trading and change our perspective, we're able to actually follow the plan a lot more. The only way you blow these accounts is if you don't follow your plan and follow the risk management. Because if you have a mathematically sound plan, it's up to you to follow it, and most people can't. So let's get the plan down and enough of this psychology. So with the 50K account, right, there's only a couple rules here. We either lose $2,500 or we make $5,000. And we either pass or we fail. The other biggest problem with this account is intraday trailing, right? A lot of people, they mess this up. If your equity curve starts to come up and we start to go down $2,500 from equity peak high, your account is blown, no matter if you're in profit or not. It will come up as you come up as well, which is why we have to take a little bit of a different approach with this. Now, I kind of like this because it's really all about math and seeing who could follow a plan or not. Anyone that complains about this are the most unprofitable people because they don't understand how this works. This is beautiful. We get, for half the price of an advanced account, we can get this to show how profitable a trader we are. And, I got a payout on it, so we'll see exactly what you guys could do here. But let's make the plan that I used, and actually I'm making better here. Now, what is going to be our position size? So if we know our expected value is 0.5 EV, right, we can kind of determine how long it's going to take, how many trades it's going to take, etc. If we follow our plan, so now we dropped our risk reward of 1 to 2 with a 50% win rate. I can do that with my eyes closed. If you guys don't have a strategy that has that, I would recommend just binge watching my second channel and just go from there. But you have to be obsessed. Now, 0.5 EV, let's figure out a position size, right? We have a 50K account, 2,500 is a loss limit. Just because you have a 50% win rate does not mean you won't lose a bunch of times in a row. And we have to account for this, right? We also have to account for the intraday trailing. Now, it does get a little bit more difficult here with the intraday trailing, but this is why we have to really come up with a solid plan that all we have to do is follow. Now, I want to 50% win rate based off Monte Carlo. It says you could lose anywhere between 7 trades in a row with a 50% win rate. You could lose a little bit more, but realistically, with my stats, I haven't lost more than 3 trades in a row in a couple of years. So 7 is perfect just because it's a little bit different. So 7 trades that we could lose, right? I want to make it 7 trades for that 2,500 buffer, which means that if we start here and we lose 7 times, we'll blow the account. 7 is fine. So now we have to reverse engineer this and get our position size here. So what are our position size? So 2,500 divided by 7 gets us to around $357 of risk per trade. So let's call it $350, right? We're able to risk $350. So now we found out our risk per trade. And this is very conservative, right? Obviously, I'd be more aggressive here, but for the people that are watching, I don't recommend that. $350 of risk. Times that by 7, we're a little bit under 2,500, which is perfect. $350, right? So my average loss is around -5%. But since we're going for a 1 to 2 risk to reward instead of that 1 to 3, we can move this up to -7.5%, which is insane. It's actually 50% more of a loss on average. Just to see, just to make this a little bit more realistic here. So if we lose 7.5% every trade, we could find our position size. Just go to calculator and we do 350 divided by 0.075. And we just found our position size. 4,000, let's just call this 4,600. Right, so our position size is now 4,600. We are risking -7.5% per trade. Right, so this is based off the position size, not the account balance. And when we lose $350, which is perfect, right? This is conservative. A lot of people try and rush it. This is why 97% of people fail. Stop trying to rush things, because once you're funded, it's literally free money. Just got to get through this first. Now, what is our take profit, right? It's our 1 to 2. So we're either going to lose $350 or we're going to make $700. Now, remember we have that $2,500 intraday trailing, right? This is very conservative stats. This is a loss. This is a win. Let's go through some scenarios here, right? We're at $50,000. It trails based off your equity curve high. I want to take 1 to 3 A+ setups per day. So on average, 1.5 trades per day. Actually, let's lower this, right? On average, 1 trade a day. Let's keep it as simple as possible here, right? So 1 to 2, on average, 1. First day, we lose, right? We lose $350. Next day, we win. We're up to $350. And this is where our EV comes in, right? Because we have an EV of 0.5, which means that since our average risk is $350, right, this is equivalent to 1R. 1R is $350. Half of that is going to be $175. So based off this math, it would take us 28.5 trades. Let's just call it 29 trades. Now, 29 trades might sound like a lot, and we're being conservative, right? In order to 10% your account, shouldn't take, in a week. It shouldn't be like 3 days. If 29 divided by 1.5, now knowing that it's going to take 29 trades, 19 days, plus 750, minus 350 on our losses, then our wins, 50% win rate, 1 to 2 risk reward, and a 0.5 EV, right? We're going to get some outliers here. There's going to be a person on here that goes on a 5-day winning streak, and they could just pass the account like that, right? Because if we do the math here, if we do 5,000 divided by 750, we get around 6, right? So if this guy goes on a 6 to 7 winning streak, they're passed, right? Just like that. The reason why we're being so conservative here is because we have a negative $2,500 intraday drawdown. So if we start to win and then we go on a losing streak, we don't want to blow the account, right? We still want to be fine. And this kind of accounts for that based off our expected value, based off our win rate and our risk to reward. Now, you can be a little bit more conservative. You could be a little bit more aggressive, but this is as conservative as I would get on a prop firm. Now, you might want to be a little bit more aggressive on an eval because it's not real money and you could just try and pass it as much and as fast as possible, depending on where you're at, if you want to buy more accounts or whatever. But when you're funded, right, this is honestly the way to go as well. Bro, you can make $750 with $125 total account, right? You're paying $125. That's your risk. And you can just make $750. And there's no point of rushing this. You just gotta really take your time here. So then when we bring this up, right, I would try and get a payout to be able to transfer that into a 150K account. And we would just size everything up times 3. Because there, right, we times that by 3, $750 times that by 3, right? 21, $2,250. So on average, you're gonna make $2,250. Basically off that $125. Because then if you get a pay on the 50K, that's, I don't want to say house money because that's gambling, but like that's not your money. Your risk is still at $125. You just move it up to 150K account. You could start withdrawing $2,250 every time you win, and this is a very conservative approach here. And then after that, I mean, you're pretty much set. Once you have a 150K account that's fully funded and past a buffer, it's free money at that point. But the 50% off these accounts are only going to last until the end of April. So if you're going to get an account, just do it now. Like it's $125 to potentially make a great amount of money. So I would try it out, see how disciplined you are. You guys can make your own plan, but that's exactly how I would do it. And I'll see you guys in the next video. Peace.